Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Wednesday, January 30th, 2008. Well, today was a wild ride starting in the afternoon. This morning was generally a light trading as we expected going into the Fed rate decision at 2:15 p.m. Eastern Time, and we'll cover all that and get right into the charts relatively quickly. First off, we saw an impressive rally today on the Fed 50 basis point cut. Although, about 3:15 as the market was rallying to new highs, Fitch came out and downgraded a bond insurer from AAA to AA, and just like that, the market ended its rally. The market started to sell, and the selling just ensued constantly all afternoon, starting at around 3:15 to the point where the markets closed much lower here on the day after being up tremendously. The Nasdaq down 9, the Dow down 37, and the S&P down 6.5. Now this might not seem like a big time downside, and it's really not in the scheme of things, and we'll show you the charts pretty quickly here. But the key here, folks, is that the Nasdaq was up 30 plus points. The Dow was up close to 150, 200 points today at the highs. So we had a major rally going into 3 o'clock. And for a reversal like this to take place, especially after a Ben Bernanke deluxe Fed rate cut, making the total rate cut in the last week plus now to be over 1% or 1.25 percentage points, to see a sell-off like this is a very bearish sign. Now the charts told us it was going to happen, and I'll tell you why. I'm going to show you here, and we mentioned this in the chat room today, that the ES futures hit the 20 moving average, as did the SPY, and the first attempt at a retrace, which is what we were doing over the last week, back up, and the first attempt to hit that 20 moving average, or any moving average generally, will see a pullback, and that's what we saw today. So let's get right into it here. Let's start with the we'll start with the ES intraday, and we'll go over the intraday here. And let's take a look here at the intraday. This is the ugly chart that we're talking about here, showing the sell-off, and I'm just going to get out my trend tools to show you exactly what's going on here. You can see right in here, we're going along all day in a very, very tight range, and that was expected going into the Fed rate decision. People were nervous in the markets a little bit based on whether or not Ben Bernanke would do a 25 basis point cut or a 50 basis point cut. And right here you can see the markets inching up, selling off, inching up, selling off in a tight range until 2:15 p.m. Eastern Time, when the Fed came out and said, we're giving the market a 50 basis point cut. We are willing to do more if that's what's necessary. We'll continue to watch. But ultimately they were very dovish in their statement. And that is key to the market, because if they had come out and said, we're done, this is it, 50 basis point, but you're kaput, then the markets could have sold off. But they didn't. In fact, we saw a pretty dovish statement from the Fed, and we rallied, sold off halfway, retraced, that's exactly what that is, and then rallied back up here. Now, this is where the reversal takes place, and you guys know topping candles and bottoming candles by now, and bullish and bearish signals as you've followed my videos longer and longer. And look at the beauty of this topping tail. You have that push up and a sell-off and a close right there. The second this candle breaks that low, off to the races on the downside with a short, and look at the fall that you get here. All right, I mean, this is it's not, you can't even compare it to anything but a beautiful chart, technical chart pattern here for an initial sell-off starting right here after you made this candle right here. Now a beautiful sell-off, and look at what it yielded. In the markets, the Nasdaq was up 35 or so points and closed down dramatically here about 9 points. That's a 45-point reversal approximately on the Nasdaq in an hour. And not only that, but the selling has continued here a little after hours, and we will see if that continues into tomorrow. Now, the rating to readjust the rating insurers here to a AA rating from a AAA might not sound like a big deal. And again, it was only one bond re-insurer here that got adjusted, but it is a big deal because these players, to stay in business, they need the top ratings, and anything less could be very ugly. All right, so now let's go to the SPY. I want to show you a little bit on the SPY here, folks. And we're going to go to the daily chart, and this is exactly what I'm talking about. So we had the major sell-off here, starting really right before the new year. You had that little retrace or a little pause, and another wave down. Well, we got that nice reversal, that tweezer effect at the lows here, and that's where we had 2 days where we tested the lows and rallied quite a bit off the lows, and the second day was where we closed positive. And then we rallied, we started to continue to climb back up, We halted here, retraced a little bit, and then rallied. And then today, when we had that intraday rally, we touched the 20 moving average. And as you guys have always known at this point, when you touch that 20 moving average for the first time after a fall like this, you're automatically or generally sent, it's not 100%, but in more times than not, in a high percentage chance, you're going to get a pullback off that moving average, and that's exactly what we got there. And now you have a pretty nice topping tail here in place. Now, I'm not sold on a major sell-off in the next few days. I do think we do go lower, especially at the start of tomorrow. Amazon reported earnings and is trading down. Originally, it traded down very quickly, then rallied to go positive on earnings, and now is trading down. And I'll show you, we'll quickly go into that level 2 to just show you exactly where it is, where it's standing right now at around 5 o'clock here this afternoon, Eastern time in New York. And you can see here, today we closed at 74.21 on Amazon, after hours on earnings in the 68 range, the mid-68 range. So we are trading down there. It was a whipsaw movement here, and that is where we are. Now, the key here is Amazon's not a huge deal to the market anymore. It was one of the beloved stocks. It may have a little impact, and it probably is going to have a little impact on retailers, especially online retailers. But as it goes, it's not a Google, it's not a Microsoft, it's not a Research in Motion, it's not an Apple. So it's not going to have that same pull, although it will have some pull. Now the key here, folks, and let's just keep this in mind, Google earnings are tomorrow after the bell. And in my opinion, we're going to have to take a close watch at Google earnings here to see exactly where we go tomorrow in tech land after the bell. And they're going to have a big impact on the Friday's movement in tech. As we have some jobs numbers coming out on Friday, which are going to be very big as well. So again, the adjustment in the bond rating here for the reinsurers, that's the big deal and why we sold off for the primary attribute. But looking at the charts, you could see it was coming. It was no big surprise, to be honest with you. We mentioned it in the chat room, and we will mention it again here. When you see the S&P, and we'll look at the SPY here, when you see this touch that 20 moving average, that's a sell signal on the first hit. Now, we could retrace down a little bit, then make a move back up to that 20. The second time you come and hit it, there's no guarantee you sell off, or the percentages drop dramatically. So you have to keep that in mind as well. And the next time we come up to that 20, maybe we break higher and go to the 50, at which point it would be the first hit of the 50, and you would assume a pullback on that move. So it's continuation here. It's the first hit of each moving average after a major move up or down where you get a nice bounce, or at least you can expect that nice bounce. Now, the futures here, as I mentioned, are trading down about 7 points after hours. So we are seeing continuation in the selling here. And who knows what this will bring tomorrow, as we do have the Asian markets, which probably will react slightly to the negative side, considering what went on here. To have a reversal in the market, and I want to show you the Nasdaq. The Nasdaq's just as ugly. Look at the rally on the Fed, and then right away the sell-off here in tech. And we basically closed right back where we started in the Nasdaq, right on this 200 moving average intraday. On the daily, the Nasdaq, one thing I want to point out is we never quite got up to this 20 moving average on Techland. So keep in mind there may be a move, maybe on Google's earnings. Who knows? I really don't know where. The way you have to take it, though, folks, is that Google earnings, every other earnings play so far, for the most part, Apple, Amazon, you name it, is getting crushed on earnings. So who knows where it goes? I won't play earnings, and I repeat that. I will not play earnings. I do not play earnings. I do not believe in it. It's pretty much a crapshoot, and I might as well go to the casino if I want to do that and just put some money on red or black. But having said that, every earnings here is just getting, clobbered. The market hates everything. And we'll see if Google can buck the trend and possibly have an upside here in the market and give tech a little bounce here and maybe touch that moving average right up here. In any case, it is a possibility that we see a retrace and a double bottom. Nothing to say that it can't. And as I'm speaking here, the futures are getting clobbered more and more. Take a look here at the after-hours futures action. This is where the market ended, right here, folks. Pretty much right here. So after hours, you're seeing some big-time candles on the downside, and we are down now on the futures, S&P futures, the E-mini March 8 contract. We are down about 9.5 points, almost 10 points. So we'll see if this continues to move. It does worry me a little, because if the Fed can't buoy the markets up and something like this happens and we go right back to the negative just as if no interest rate cut ever happened, what card does the Fed hold anymore? What bullet in that gun does the Fed have to use? If interest rates aren't going to buoy this market, they got nothing. They absolutely have nothing. What are they going to print some more money and flood the? I mean, you guys get my sarcasm there. But the point being is the Fed has lost credibility here. Even that rate cut didn't do much, and it is a little scary to be honest. So we will see where this heads. For now, it's not a pretty picture after hours, though anything can change overnight. Okay. So let's just touch base here on a couple other things going forward. We have some major economic data coming in the next couple days. We have the Google earnings tomorrow after the bell. Thursday after hours, Google will report earnings, and we will see where tech stands tomorrow. It could be an ugly day as it's shaping up right now, but again, it's just after hours and volume is extremely light, so you can't really base a lot of where the market is now. Just keep watch, folks. Be safe. We stayed mostly in cash today, very few trades because of the risk here involved, and we were absolutely right with this massive sell-off. Once again, the chat room comes through big time on keeping me safe, and hopefully everyone in the chat room stayed on the sidelines with me for the most part, and we stayed all safe. Have a wonderful day, guys. Talk to you soon.